few seconds ago, somewhere on Earth, a transfer worth tens of millions of dollars just happened. No headlines, no notification on your phone, no dramatic countdown, just numbers moving between machines. Now another one, and another. By the time this sentence ends, billions of dollars will have changed hands across the global financial system. Not through banks you recognize, not through stock markets you see on TV, not through apps like PayPal or your local banking app, but through something far stranger, an invisible financial network, quietly moving trillions of dollars every single day. It's not one company, not one technology, not even one country. It's a hidden layer of global finance, the plumbing behind the plumbing, and without it, the modern economy wouldn't just slow down, it would stop, planes grounded, markets frozen, banks unable to function. Because behind every payment, every bond trade, every government debt sale, there's a system most people never hear about. A system that quietly connects central banks, governments, global banks, and financial markets, a system built on trust, speed, and staggering amounts of money. And almost nobody outside finance ever thinks about it. But once you see it, you realize something unsettling. The entire global economy runs on a financial network most people don't even know exists. To understand why this matters, we need to start with a simple question. How does money actually move across the world? Not conceptually, not in theory, physically. If a company in Germany buys oil from Saudi Arabia, if a hedge fund in New York buys Japanese government bonds, if a government somewhere issues billions in new debt, how does the money actually travel from one side of the planet to the other? Because money today isn't paper. It's numbers on servers, which means every transfer needs infrastructure, a system. And that system must do three things. First, it has to connect banks globally. Second, it has to verify transactions instantly. And third, it must handle staggering volumes of money without breaking. We're not talking about thousands of transactions or even millions. We're talking about trillions of dollars moving every day. And if even a small part of that system stops working, the consequences ripple everywhere. Banks freeze. Businesses can't pay suppliers. Governments struggle to fund themselves. Markets panic. Which is why the invisible network behind global money has quietly become one of the most important systems on Earth. Yet most people have never heard of it. Let's start with something surprising. When you send money internationally, the money rarely moves the way you think. Imagine you live in Pakistan and you send $1,000 to someone in the United States. It feels simple. You click send. A few seconds later, the money arrives. But behind the scenes, something very different is happening. Your bank doesn't physically send $1,000 across the world. Instead, it sends a message, a digital instruction. That message goes through a system used by thousands of banks worldwide. A system called SWIFT. SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication. It's not a bank. It doesn't hold money. It doesn't move money. It just sends messages between banks. But those messages control trillions of dollars. Every day, SWIFT carries around 40 to 50 million financial messages between institutions in more than 200 countries. Each message is essentially a command. Pay this bank, credit this account, transfer this amount. Think of it like the global financial system's email network. Except instead of emails, it carries the instructions that move the world's money. Without SWIFT, banks would struggle to communicate. And without communication, global finance would collapse into chaos. But here's the strange part. SWIFT itself doesn't move the money. So how does the money actually travel? That's where the network gets even more complicated. Imagine two banks, one in London, one in Tokyo. A client in London wants to send $5 million to a company in Japan, but the London bank doesn't necessarily have an account inside the Tokyo bank. And the Tokyo bank doesn't necessarily have one in London, so they need a middle layer. Enter something called correspondent banking. This is one of the least understood pieces of the financial system, but it's everywhere. Banks maintain accounts with each other around the world. These are called nostro and vostro accounts, strange Latin words that basically mean our money held by you, your money held by us. Through this network, banks can settle payments globally. Imagine the London bank keeps dollars in an account with a large American bank. That American bank also has a relationship with the Japanese bank. So when the $5 million transfer happens, money moves across this web of accounts, step by step, bank to bank, country to country, each step verified through messages, each transaction settled through balances held across the system. It's not one direct jump, it's a chain, and that chain stretches across the entire planet. Thousands of banks, millions of accounts, constantly adjusting balances between them, and every day, this system processes trillions of dollars. But here's where things get even stranger. Much of the world's financial system actually runs on US dollars. Even when the United States isn't involved, a company in Brazil might sell goods to a company in Turkey, but the payment happens in dollars. A government in Asia might borrow money internationally, but the debt is issued in dollars. Oil, commodities, shipping, finance, much of it runs through the dollar system, which means somewhere in the chain, US banks often become involved because dollars ultimately settle through the American financial system. This gives the United States something incredibly powerful: control over the infrastructure of global finance. Not complete control, but enormous influence. And sometimes, that influence becomes a geopolitical weapon. For example, when countries are cut off from SWIFT or from dollar clearing systems, they don't just face inconvenience. They face financial isolation. Banks struggle to transact. Companies struggle to import goods. Currencies collapse. We've seen this happen with sanctions. And suddenly, a technical financial network becomes something much bigger, a tool of global power. But SWIFT and correspondent banking are only part of the invisible network, because once transactions are agreed, they still need to be settled, and settlement is where the real money moves. This is where central banks enter the story. At the core of every financial system is a central bank: the Federal Reserve in the United States, the European Central Bank in Europe, the Bank of England in the UK, the People's Bank of China. These institutions maintain the ultimate settlement accounts used by banks. Commercial banks hold reserves at central banks. When banks need to settle large payments between each other, those reserves move. For example, if Bank A owes Bank B $2 billion, their balances at the central bank adjust. Money leaves one account and enters another. No trucks of cash, no piles of bills, just numbers shifting on the central bank's ledger. But those numbers represent real financial obligations across the system. And because central banks run the final settlement layer, they sit at the center of the financial universe. Everything eventually flows through them. Now imagine how many transactions happen globally each day: bond trades, stock trades, currency trades, commodity trades, bank transfers, corporate payments, government borrowing, derivatives contracts, each one creating financial obligations that must settle somewhere. Each one feeding into the invisible network. Now add high-frequency trading, where algorithms buy and sell assets in milliseconds, or global currency markets, where more than $7 trillion trades every single day, or the massive government bond markets used to fund national budgets. Suddenly the scale becomes hard to grasp. The global financial system isn't just large, it's astronomically large. And underneath all of it, the invisible network quietly keeps everything synchronized. Messages, balances, clearing, settlement, day after day. Trillions moving through circuits most people never see. But here's the uncomfortable part. This system works incredibly well until it doesn't. Because the entire structure depends on something fragile: trust. Banks must trust other banks. Markets must trust settlement systems. Investors must trust that payments will clear. If that trust breaks, even briefly, the network can seize up. And when it does, the consequences spread quickly. We saw a glimpse of this in 2008. During the global financial crisis, banks suddenly became unsure about each other's balance sheets. Nobody knew who held toxic assets. Nobody knew who might fail next. So banks started pulling back. They stopped lending, stopped extending credit, stopped trusting the system. And when trust disappeared, the invisible network began to freeze. Money stopped circulating. Financial institutions that relied on constant flows suddenly faced liquidity shortages. Even giant banks became vulnerable. which is why central banks had to step in aggressively, injecting trillions of dollars into the system, acting as lenders of last resort, not because they wanted to, but because if the network fully stopped, the global economy might collapse with it. Since then, regulators and central banks have tried to strengthen the system, more capital requirements, stronger oversight, better clearing mechanisms, but the network itself has continued to grow. Faster transactions, bigger markets, more interconnected institutions, which means something else has quietly increased too. Systemic risk, because when trillions move through a tightly connected network, small problems can spread very quickly. One bank failure, one market disruption, one technical failure, and suddenly the invisible plumbing of finance becomes very visible. For the wrong reasons. In 2012, for example, a technical glitch at a major exchange caused chaos in markets. In 2016, SWIFT-related hacks allowed attackers to steal tens of millions from bank accounts. In 2020, pandemic panic pushed financial markets toward extreme stress levels. Each event was different, but each revealed the same reality. The global financial system depends on infrastructure that must work perfectly every day, every hour, every second. Because when trillions move constantly, even a small failure can become a global problem. Now here's where the story becomes even more interesting. Many people believe new technologies will replace this system. Cryptocurrencies, blockchain networks, decentralized finance. The idea is simple. Instead of banks and central institutions running payment systems, a decentralized digital network could do it instead. Transparent, borderless, independent of governments. It's a compelling vision, and in some areas, the technology has real potential. But when you compare scale, the reality becomes complicated. The traditional financial system processes tens of trillions of dollars daily. Global crypto networks process only a tiny fraction of that. Speed, regulation, security, and trust still matter enormously when handling global finance, which means the invisible network built over decades isn't disappearing anytime soon. If anything, it's evolving. Banks are experimenting with faster payment rails. Central banks are exploring digital currencies. Settlement systems are becoming more automated. Cross-border payments are being redesigned to reduce delays. But the core challenge remains the same: moving money safely, instantly, and reliably across the world, without breaking the delicate balance of trust that keeps the system alive. And here's the deeper irony. Most of us interact with the financial system every day, paying bills, sending money, buying things online, but we rarely see the infrastructure behind those actions. It's hidden, silent, working in the background until something goes wrong. Then suddenly everyone notices. Markets panic, governments intervene, headlines explode, and the invisible network briefly becomes visible before disappearing again beneath the surface. Because in the end, the global economy isn't just factories, companies, and consumers. It's also a vast digital web connecting financial institutions across the planet. A network that moves staggering amounts of money every second, quietly coordinating the flows that keep a modern life functioning. And almost nobody thinks about it until they have to. So the next time you hear about markets rising or falling, or governments borrowing billions, or banks transferring funds across continents, remember something. Behind those headlines, behind the trades and payments and debt auctions, there's an invisible system working non-stop. A network quietly moving trillions of dollars every single day. The plumbing of the global economy, complex, fragile, essential, and still largely hidden from view. Which raises a question that very few people ask. If the modern world depends so heavily on this invisible financial network, what happens? The day it stops working?